So during our prep just now, you said something that just kind of stood out to me. I want to ask you about it really quickly.
Sure.
Racing school? Are you racing cars? Is that a hobby?
I try not to race them too often, but I am a total car junkie, which it works well for being in the rare earth space, just given, our foundational customer is GM. Pretty excited to see them in F1 this year.
Yeah.
So, or next year. But, it's definitely a hobby and passion of mine when I'm not working.
All types of cars, or do you have a particular car that you liked to race?
I have to say only GM vehicles, right?
Yeah. Okay.
No, I'm pretty. I like all different types. I'm a big Porsche guy, but I like them all.
That's awesome. I've always wanted to do that. I should look into that. It sounds fun. Welcome to the show, and welcome to this episode of Trends with Benefits. My guest today, Ryan Corbett, CFO of MP Materials, and he's here to talk with me about, you probably heard it earlier, rare earths, one of the biggest topics in the markets today, because rare earths, I think, intersect with so much about what's going on, whether it's automobiles and technologies and geopolitics even, and supply chains. A lot of storylines intersecting with the rare earth storyline. So I'm really grateful, Ryan. Right. Thank you so much for joining me.
Yeah, happy to be here. Thank you for having us. Definitely timely. Rare earths have been in the news more lately than I think ever in the past, and I think for good reason.
Yeah. Maybe we can talk a little bit about the past initially and how MP Materials got started. They took over a mine that I think Molycorp had, and
sure.
And you were part of the initial launch of MP Materials, no?
Sure. Yeah, I actually came into my role here originally as working for the founding shareholder group of the company. And so our CEO, Jim, and our COO, Michael, are the co-founders of the business. I started working for Jim in 2019, sort of splitting my time initially focused on MP Materials as a portfolio company, of Jim's original fund. And when I joined him, I was pretty excited about the promise of the business, but it was really one of many things that we were focused on. And, I think I hit it at the right time. I remember being, really participating more as a board observer and joining the board calls every week and seeing the progress that Michael had started to make sort of coming out of 2018 into 2019 from an operational perspective. And I think, Jim and I sort of looked at each other and said, whoa, I think this is really going to work. And, it was a pretty bold vision from the beginning, but seeing the operational progress that, started to manifest in real financial results, I think we looked at this business as really the way to compound capital for the shareholders of the fund at that point, and also do something so important for the United States and for the modern economy writ large, which I'm sure we'll get into, what these things power. But, that prompted a major pivot from both of us to focus exclusively on this. And so I was fortunate to have been asked to join full time as chief financial officer towards the middle of 2019. And since then, the focus at that point had been on gearing us up to get public, and obviously working on what has been, I think, a pretty thoughtful strategy from a vertical integration perspective since then. And so certainly not without, a lot of trials and tribulations. And as you mentioned, the site has a pretty storied history, a lot of success, and frankly, the ownership before us, a pretty spectacular failure, which I'm sure we can talk about, particularly interesting because so many of the issues that plague prior ownership are things that we have solved and that were imminently solvable with the right strategy and an execution focus.
Are those the things you were talking about in terms of operational things that just kind of stood out to you?
Yeah, one of the things that's underappreciated, I think, about what had happened under prior ownership versus, what we focused on day one is approaching this from a staged perspective. So we'd always talked about in the past, and we're sort of moving away from that since we've sort of completed this vertical integration strategy. But, we called it stage one, stage two, stage three. Stage one was making a rare earth concentrate product. I think those that are not steeped in rare earths assume that's the easy part. It really isn't. It's actually the portion of the process at Mountain Pass. And for context, Mountain Pass had nearly $2 billion of invested capital from prior ownership, and that's 2010 dollars. So inflate that at, whatever those rates would be, call it, 3-4 billion today. The part of the process that plagued them was making rare earth concentrate. And that's what we perfected starting in 2018 and 19. When I say perfected, I mean got to a great point, but we're continuing to improve that as we speak. And so getting that behind us and building a scaled business where we could generate cash flow and really start to self-fund what was this multi-stage strategy, I think was so important for us to put a base under the business to continue the strategy on a go-forward basis.
Yeah. Did you know how to pronounce these metal names when you first got involved?
No, sometimes I still struggle every once in a while. And it's that portion of the periodic table that's sort of pulled out and lined up at the bottom that I think a lot of folks just ignored in high school chemistry because you assume there's a reason they pulled it and put it at the bottom, but you shouldn't have ignored it. It's really, really important. But, there are 17 rare earths. Most of them are what are called lanthanides, and then there are a few that sort of come along for the ride and get grouped in there. For our purposes, the ones that have garnered so much attention, rightly so, given they are the foundation of modern permanent magnets, is neodymium praseodymium, which is found at pretty significant quantities at Mountain Pass.
Mm-hmm. And where are they used? And just an idea of different technologies, whether are they in defense or
Sure.
automobiles, things of how they might be used.
Yeah, I mean, anything that you interact with today that has motion, generally, particularly if there's a size requirement, so it needs to be miniaturized, or a power requirement, it needs to generate a lot of power like a wind turbine, has rare earth permanent magnets. They are fundamentally the strongest from a power density perspective of any of the magnets that have been discovered. They're I think they were discovered in the 80s and 90s and really, revolutionized the modern ability to miniaturize technology. And so your vibration motor in your iPhone, and frankly, every single one of the speakers, this microphone probably as well, are all based on very, very small rare earth permanent magnets that are able to translate energy into motion, or vice versa, in the sense of, like the wind example.
Yeah. And more technologies, it seems like we're always going to have a need for magnets, if you will, or these types of metals. It must have been fascinating to navigate the process of going public. I think you guys went public via a SPAC, which was a hot thing at the time. How was that process?
Well, it's funny. We are hoping that one day we just get to become a regular, public company that is not always referred to as a former SPAC. But the reality for us is the timing was just really fortuitous. We were actually preparing to go public regular way. We were in the process of writing an S1. We were in that phase where, I was falling asleep with S1s on my chest, like getting ready. We were in the throes of it. And, interestingly, what we saw in that period of time was the technology, if you will, of the SPAC really changed in that 2020 timeframe. And it worked for us for a pretty particular reason, which was we come to this, as major shareholders of the business, right? As I mentioned, sort of my history with JHL Capital. And so what we were very focused on doing is we thought that the company was at a level of maturity where we were ready to go public, obviously, given our S1 journey. And we needed a very specific amount of capital that needed to be raised to fund what we call stage 2, which was funding the upgrades to the separation and refining process at Mountain Pass. So we knew we had a specific, envelope of capital that we needed. And what we wanted to do was ensure that when we went public, we were maximizing the value to our existing and new shareholders, and not being subject to, the typical go public process where, you wake up the day you're supposed to go out and, I guess if it were modern day, someone tweeted and the market's down and the bankers are telling you, oh, sorry, we're going out at this valuation instead of that valuation. We wanted to get out of that because we had so much confidence in what we were providing to the market. And so having the pipe process, and there was one particular
That's private investments in public equity.
Exactly. Yes.
Right. Okay.
And so there was one DSPAC that went right before we sort of pivoted to the SPAC process that raised, I think it was $500 million in the pipe before they actually did the DSPAC. And so for us, we knew we needed $200 to $300 million to fund this investment. And so our thought was, if we could raise that in the pipe, get a mark on valuation from the pipe process, and then properly design the DSPAC where if everyone redeemed, no problem. If no one redeems, we have, incremental capital for us for the future, and we can future-proof the balance sheet. And frankly, it ended up being such that the pipe was a great value check. It was extremely successful. And then, of course, success begets success, and nobody redeemed. But it allowed us to get out at a valuation that we thought was fair for the stage of the business at the time, and ensure that we came out on the other side, public company with a liquid currency, and we controlled for some of the variables that we might not have been able to control for in a regular way IPO. And that's sort of a fundamental thing that you will see from us as a management team, is we try to do our best to control the things that are typically, uncontrollable to the best of our ability, so that we can just focus on execution.
Yeah, that's awesome. Sounds like you launched out of the gate with a lot of momentum.
Ups and downs for sure, but we launched with real momentum for sure.
Yeah. One of your pipe investors was at Chamath Palihapitiya. Is that right?
Yes. Yeah. Chamath was an anchor in the pipe, and certainly, he was very active at that time with his own SPACs out there, and it looks like he just recently is re-entering the market. But I think actually, if you look at the breadth and different types of investors that were anchors in the SPAC and in the pipe process, it gives you a sense of how broad the interest was then. And I think, we've gone through phases where the focus for rare earths was EVs, right?
Yeah.
The magnets are the fundamental piece of the motor in electric vehicles. And so there was so much excitement then. And I think now what you've seen is the applicability of magnets is so much broader than that. Of course, they still remain critical pieces of the EV supply chain, but there are so many other parts of it that are so critical. And you see investors like Lee Cooperman that's been was an anchor in the pipe. Really a value investor. It's been one of our largest shareholders since the beginning, and it gives you a sense of just I would guess there are not a lot of businesses out there where you've got Lee and Chamath, hand in hand.
Yeah. I mean, you mentioned it as an indication of broad interest. Do you think that process as well also just helped broaden the awareness of the story?
Oh, sure. Absolutely. Look, I think that, awareness then was good, but nowhere near where the awareness is today. I think we're at a very interesting point in the maturation of the rare earth industry right now. And there are so many things that have happened that I'm sure we'll talk about, our partnerships with Department of Defense, partnerships with major, domestic and global manufacturers. But, really in April of this year was when I think broadly the public really became aware, not just of, hey, these things are really important, but became acutely aware of how susceptible the United States was to, the mercantilist policies of China and the multi-decade strategy that they've had in this space, where, I'm as much of a pure capitalist as it gets, but when you don't have an equal playing field, right? When you have a purely capitalist mindset competing against mercantilist policies and a very organized multi-decade industrial policy from what has become a real geopolitical adversary, you need to figure out creative ways to equal that playing field. And frankly, in the issues that we've seen today with, post-Liberation Day, with, tariffs coming on. April was the time frame where, export restrictions were placed on these critical products. And I think the things that we have been trying to scream at the top of our lungs for, many, many years now really started to hit home. I think that is what has brought this industry, to the front page of the Wall Street Journal, multiple times over the last couple of months. And it speaks to the importance, and it speaks to the geopolitical ties that are as acute as ever in this space.
Yeah. One thing we probably didn't do, and it's just kind of give a little bit of backstory on what happened to rare earths or that industry within the United States.
Sure.
People talk about Mountain Pass as having one of the largest deposits of rare earths, but that's only one part of the story.
Sure.
Can you kind of walk us through that, kind of what happened in history and why are we now at this critical juncture?
It is really a fascinating history when you think about how Mountain Pass was discovered, how this industry was built over time. And so, a couple of interesting things there. Mountain Pass was originally discovered in the late 40s when, people were prospecting for uranium for obvious reasons at that period of time, in the period of nuclear proliferation. What happened to be found in the Clark Mountains, where Mountain Pass is in the middle of the Mojave, was not uranium. It kicked off some readings on a Geiger counter, but what ended up being found was one of the world's richest deposits of rare earths. Oftentimes, rich rare earth ore bodies are found alongside some amount of thorium and uranium. And I'm sure we'll cover this, but we're very fortunate that actually the levels of thorium and uranium that are found alongside our rare earth deposit are actually really, really low, which allow us to have, a much easier means of extraction and beneficiation and refining. But that is initially what set it off. And so, through history, there have been a variety of use cases for these products. And so interestingly, when color televisions became, a new technology, Mountain Pass, despite being, said often, by folks out there like, oh, there are not a lot of heavy rare earths. There actually happen to be plenty of heavy rare earths in Mountain Pass, and we can talk about the difference between lights and heavies. But Mountain Pass was really focused on producing europium for many decades, which is the red phosphor that colored the reds in color televisions at the time. And so that was the main, item that was being, sourced from Mountain Pass at the time. That's obviously changed over time. But, that I think indicates multi, decade history. If you look at, how things have trended globally, if you look at the 50s to really the 80s and 90s, that is referred to in the rare earth space as the Mountain Pass era. That's how dominant the United States and Mountain Pass were at the time in production of rare earths. And really, many of the technologies that we're leveraging today for beneficiation and for refining were created by the original, owners and operators of Mountain Pass. And so, it's got a rich history being owned originally by Unocal, which was bought by Chevron. And then eventually, it was called Molycorp, back in the 70s and 80s. There was a Molycorp 2.0, which was kind of the reason we're here, that spectacular failure that I referenced before, that we've been able to pick up the pieces and really put it back together and take it to the next level. But I think the fascinating thing to think about is this isn't unique to rare earths necessarily, but this was one sector where, you've seen the typical playbook of the Chinese studying what we've done here, taking it, subsidizing it in their market. And it's one of the few natural resources where China happens to be very rich domestically. They don't have a lot of oil. And in fact, there's a Deng Xiaoping quote that I think speaks to this entire, transition over time to the Chinese dominance in the space, which was, China has, the world has oil, China has rare earths. And that speaks to the importance and sort of how the focus shifted in China to leverage the natural resources that they do have.
And so are you talking about they were able to price a lot lower and just introduce kind of a supply glut in the market and run Molycorp out of business?
It's interesting. Despite rare earths being not particularly rare, elementally in the Earth's crust, right? It's very rare to find them in super rich concentrations and in an area that's close to the surface, that's easily mined, and then within a mineral-bearing host rock that is easy to extract from. It just so happens that China has, a couple of very attractive ore bodies there. Mountain Pass is, absolutely a world-class asset. And there's one in Australia that's of similar quality and scale. And so they leveraged their very high quality, assets, which you have to have that. I mean, you could subsidize till the cows come home, but if you don't have, fundamentally a competitive and quality ore body, you're beating your head up against the wall. But so they were able to take, the assume Mountain Pass and Baotou are equal, which is their main, rare earth ore body. They did take that and use the typical Chinese playbook of subsidies, state control, and frankly, over time, massive consolidation to be able to really control the supply. And I think that it was frankly very forward-looking and thoughtful, because I think they saw the era of electrification, frankly, before a lot of countries did. And you think about the automobile sector, right? Automotive, if you take all of production, sales, service, et cetera, it's one of the largest employers in the United States. And that's true writ large. And frankly, the Chinese are very focused on employment, to keep their population employed. The internal combustion era totally passed them by. I mean, think about what they were exporting from an automobile perspective before the era of electrification. Nobody wanted a Chinese car. Now, in EV land, they frankly leapfrogged, some of the German OEMs, some of the US OEMs. I think we've got great products now, but they were focused on this for decades before we were. And I think recognized we've got a shot to be a major exporter and have real control over a critical industry that drives a ton of employment. And they did that very thoughtfully. And it left us really susceptible to their manipulation. And that, I think, is what has brought all of this full circle back to, we have the assets and the capability in the United States in a big way. We needed a thoughtful set of operators to leverage them appropriately. And then we needed the right policy, which I think we finally now have, to be able to actually compete against, the Chinese in what was an unequal playing field for a very, very long time.
One of the other aspects, from what I understand about our involvement in the rare earth space as a country, was not only what's in the ground, but how it was processed. And because we could still dig a lot of, I don't know if I'm using the right terms or not, ore body out of the ground, but we still had to send it to China for processing, because eventually that's where the expertise was. And I would hear that it was really, we lacked that expertise in the US. Is that changing? Is that part of your strategic plan?
I would say it was less about expertise and more about, they created a center of gravity there. There are universities that are focused on rare earth refining, right? They have thousands of students that graduate from that every single year. And so they created a real industry. And when you had US industry competing against that without the equal playing field from an economics perspective, of course you're going to have the atrophy that we experienced. However, the fundamentals of refining, most of that technology actually was created in the US at Mountain Pass.
Right.
And so we have always had that expertise. What we really needed, and what we started to talk about at the beginning about, what worked and what didn't work in the 2010s timeframe versus today, is you needed a scaled business under you to be able to bring that technology to bear to drive cost competitiveness versus the Chinese, even without the equal playing field, to be able to build a scaled business. And so for the United States, I don't think it really was ever a expertise, because we've had it. It was really, do you have the right tools to be able to compete in a global market? And then, do you have the base under you to have the confidence to invest, right? A lot of times we hear, to your point, we can mine all we want. We don't have the refining. I think one of our fundamental advantages as a company is the fact that we're co-located and integrated. And that makes things actually a whole lot easier. And so, what you need are the fundamentals there to be able to support a scaled player. And that's why I think it's so important. If you look at the industry structure that will develop here over time, particularly with the changes that have just been brought to bear in the industry, you need a scaled national champion in order to have kind of the backbone in the industry, because this type of work requires scale to be cost competitive.
Right. And so maybe we can talk about the government's investment in MP Materials and the deal that you have with the Department of Defense. Can you give me a little color on that?
Sure. Yeah. So, after I think the export controls in the space really brought to the forefront, how susceptible the United States is.
How critical was April? Because it's in years past, there's been export controls between China and the U.S. What was so critical about April?
I think that in the past, export controls on magnets were always a theoretical boogeyman in the industry, right? It's what if, and then it actually happened. And so I think that industry in the United States finally had to wake up to the fact that, look, I got to give a lot of credit in particular to GM as an example. They saw this issue earlier than many and started to really adapt their supply chain to focus on this. But not many others really took that logical next step and understood just how susceptible we were. And so, you look at what happened in April when magnets actually stopped flowing. I think it was within weeks. We had the first automotive plant. It was a Ford Explorer plant in the United States shut. And interestingly, the part, and I think Jim Farley discussed this, publicly in one of his appearances, is it was speakers. It was the audio system in the Explorer that they couldn't make because they did not have the magnets that went into the speakers. And you can't really sell a car without a stereo. And so, and it's so interesting to think about. It wasn't even traction motors, right? The thing that everyone focuses on. It's all these other little parts throughout the vehicle that, OEMs couldn't get access to. And so I think what we saw in April was U.S. industry like on the brink. We were getting calls from every single household name you can think of: automotive, aerospace and defense, consumer electronics, household goods, white goods, HVAC, you name it. All of them realized, holy cow, if this is my supply chain, I'm realizing I've got 2 months of inventory and then I'm out and I'm shutting my plant. Or if I've got a tier 1 or a tier 2 or a tier 3 doing this, I don't trust them to be able to fix this issue. And so it caused, I think, a real panic. Yeah. And I think I got to give a lot of credit to this administration for listening to industry and really figuring out, okay, this is bigger than just defense. And defense was pretty scary, right? We need rare earths to not just power all of the actuators in a fighter jet, but there's actually, one rare earth that we don't talk about quite as much because the economics are not as attractive, but lanthanum that we produce at scale at Mountain Pass is used in FCC catalysts that go into the jet fuel that power those fighter jets. Yeah. And so if you don't have access to these, not only is your defense industrial base incredibly at risk, but your entire industrial economy, we were almost brought to our knees, and we cannot ever allow that to happen again. And again, I applaud the resolve in moving quickly to try to fix this issue on an accelerated basis, right? This was the engagement with the Department of Defense and frankly, across, multi-agency across the United States government was, how do we fix this with a warp speed mentality so that this issue is off the table, period?
Yeah, that's great. I mean, I remember years ago when we launched an ETF based in this space, I actually had an Air Force general come on and talk about the strategic metals list and critical metals list that the Department of Defense maintains. I'm like, okay, it's strategic, but what are we doing about it? And so finally something's happened.
Yeah, it requires, I think, some really focused policy to accelerate things. I mean, what you've seen from MP Materials since 2017 is obviously a recognition of this issue and a desire to thoughtfully execute on a strategy to try to solve it. We invested, before the investment from the Department of Defense, we invested over $1 billion of private capital in this issue. And so I think that speaks to, certainly, I think we have had and always have had a path to address it over time, but being very thoughtful. We're a shareholder-driven company, right? We need to do this thoughtfully and maintain all of our stakeholders, both the country and our shareholders, take the right risks and are rewarded for them appropriately. And so I think we would have eventually gotten there regardless, just at sort of a pace that allowed, us to slowly level the playing field ourselves. This investment allows us to leapfrog and really accelerate and bring to bear a capability that is scaled, that is sustainable, and really kicks off the positive flywheel. Sort of what I was talking about before, China has a big industry. They've got thousands of students that study this. You need the capacity in place to kick off that flywheel of people focusing on it, universities focusing on it at scale, not just, how do we get tiny amounts of rare earths from coal, right? That's not going to actually fix the issue. And so, I think what we've structured here will allow that positive flywheel to develop and will bring the whole industry with us. Our view and strategy here is not that MP is the industry. I think given the fact that we have by far the best asset in the Western world as our base, and we have, a massive head start, we are and will be the national champion that empowers the rest of the industry. But there are so many pieces of this supply chain. It's not just you dig it out of the ground and lo and behold, you got a magnet. It's, 20 process steps. It's, metallization, it's powder production, it's pressing and sintering and coatings and finishing, all of these things. And we'll bring all of those pieces of the supply chain together now that we've got sort of a scaled backbone to support them.
Now, are you referring to your next facility, or is that part of that
Yes.
story? Yeah,
that's exactly it. And so for context, backing up a little bit on, what the engagement with DoD has enabled, brought capital into the business. It brought a price floor mechanism that, to my points earlier on having a set of economics that drive the ability to reinvest. I think that was super critical, because what you see from Chinese industry is, they don't need to make money, right? They've got state subsidies, state mandated consolidation. And, if we could figure out a way, and we've been thinking about what is the right way to do this. We've been thinking about this for many, many years. How do we do this in the most American way possible, countering, what is a focused mercantilist policy? And so, one of the major aspects of this deal was what we call the PPA, the purchase price agreement, that allows us to realize a more fair and what would be a much more likely market-based price on our products, but not put all that burden, for example, on consumers, right? If we just put, for example, a bunch of tariffs, then it's only the consumers of the magnets that are bearing that, shift in policy. The way we were able to set this up is it sort of creates a glide path. It creates a window for us to build this capacity at scale, have those reinvestment economics, and get this job done so that, after 10 years, after 15 years, we've got a scaled industry that can stand on its own 2 feet.
Is there a time limit to the government's investment?
So obviously the investment is an investment in convertible preferred equity. And so that, that is sort of, those are their shares, they can do with them as they please. The purchase price protection applies for 10 years. And then the 10X facility that you mentioned, which is where we're taking what is our current capacity to manufacture magnets, which in our facility in Texas that we call Independence is starting out at 1,000 tons. The reason it's called 10X is once that facility is done, we'll get to 10,000 tons of capacity, which, our view is we can totally cover that on a vertically integrated basis. And it creates the scale that I was talking about before that creates that positive flywheel. That agreement with the department is a 10-year, 100% offtake starting once we put that in service. And so we're targeting the end of 2028 to bring that facility online. And then we'll have a 10-year agreement with the department where they've effectively backstopped that entire facility. I think the logical conclusion of how that facility looks is we will commercially syndicate a significant portion of that plant to, the GMs and Apples of the world. But it creates an environment where we have the certainty to invest and invest quickly.
Beyond that 10 years and the way that China operates, how do you compete against China with their mercantilist ways?
Sure.
Is it that now you'll have these lines into various companies and like the GMs of the world that have now realized that, they need a domestic supply and that will help bolster domestic demand?
That's certainly part of it. I think, I think Jim put it really well on, I think it was our Q1 earnings call, actually before our announcement of these transactions. It was, after April, but he said the rare earth Humpty Dumpty, it fell off the wall, not getting put back together, right? There's just no way you can go back now when something that was always theoretical became real. And so that this can and will happen again if we don't control for it. So for sure, I think the approach to this industry from the consumer perspective has changed. I think the interesting thing and why our agreement is such a win-win-win and is so sustainable over time is even without this investment, Mountain Pass, with the quality of the ore body and the scale that we have on the upstream side of the business, is competitive from a cost perspective with the best in China. And so, the Chinese can subsidize their industry all they want, but if you look at the dollars and cents of the cost to produce, a kilogram of NdPr oxide, we can compete. We are in the process of ramping to our full targeted capacity of approximately 6,000 tons. And our strong view is once we get there, that will put us in a position where we're cost competitive with the best. And so you have to start with that. We don't want to just mimic the Chinese way of throw subsidies at things that are not economic. It's just create reinvestment economics with something that actually is sustainable on the upstream side of the business. When you look at the downstream and you look at magnetics, part of the reason the Chinese have been so successful is not that they're so much better at it. It's that they've been doing it for a long time. Frankly, actually a lot of the IP, despite rare earth permanent magnets, there's actually this little debate that's gone on as to whether, the foundational patents were discovered, and this is actually pretty wild, between scientists at GM and DoD, thinking about who our main customers are. It's like unbelievable how full circle this has become. That is where rare earth permanent magnets, neodymium iron boron magnets were discovered with GM and DoD scientists in the United States in the 80s. And then also there was a Japanese discovery as well, right around the same time. And so there's sort of a debate as to who was the most foundational. I think they were both critical. But the Japanese led the magnet side of the business for a very, very long time. Again, typical playbook from the Chinese, induced and incentivized the Japanese to bring some of that capability into the Chinese sphere. And then they took it and improved upon it and then drove scale and had a lot of practice. And so that's where the center of gravity has been. I think for us in going from our 1,000-ton plant, which, we've talked about taking that to 3,000, and then having a full 10,000 tons of capacity, that allows us to have the scale economics that can allow us to compete. There are still going to be the instances where we've seen quotes from Chinese magnet manufacturers that are actually selling magnets for less than the cost of the raw materials required to make them. We're never going to get there because that just isn't the American way. That is not the capitalist way. But we will close the gap with this type of scale. And again, like I mentioned, building up the various pieces of industry that actually touch on other critical minerals, like to do the metallization, for example, for rare earth oxides into rare earth metals that go into magnets. You need tungsten, you need molybdenum, you need graphite, you need all these things. And so if you are a artisanal graphite recycler in the United States, which there are some that can support us now, and you see, MP Materials has secured 10,000 tons of capacity. That's for 10 years after 2028. So through 2038, I know I've got big demand. I'm going to invest. And so again, it unlocks those positive signals in the market-based signals to create the conditions that exist in the Chinese market because of the scale they have, recreates them here. And then, by the time we've stood this up, we'll have a real sustainable capability.
That's fascinating. We find ourselves at a time now where it seems like industrial policy in the U.S. is intersecting with national security, case in point more recently with the deal with Intel that the government has made. Sure. Do you foresee more of that happening where national security is intertwined with industrial policy? And what questions do you think shareholders should have about such deals?
Well, I think, from my personal perspective is when you look at certain critical industries, obviously critical materials, and that term is often misused, but, rare earths, the other supporting, elements for rare earth production, for coatings for, fighter jets and things like that. And then chips, undoubtedly, where there's a market failure, that is where the government has a role to play. That's always been the American way, is the government has a role to play to fix the market failures. And so, Intel is an interesting example, and I'm sure there will be others in those types of industries. And I think the thing that is different, and I think that is actually sustainable, it's not that, the government, I think, has any interest, at least from our interactions with government, in changing the paradigm of American capitalism. What it really is trying to change the paradigm of is making things a win-win-win, where you incentivize performance, and the American taxpayer is not just subsidizing a bunch of different players with a bunch of small dollars and wishing and hoping that things work, right? Our investment in particular, we have to perform, right? The DoD is our largest shareholder. We must perform for them. And when we do, our shareholders win, our customers win, the industry wins, and the American taxpayer wins. And Jim has said this before too, where, he anticipates, sitting in a podcasting seat or, at a conference in 5-10 years and people saying, wow, like, why'd you take that government deal? They ended up making so much money off of you. And we welcome that, because at the end of the day, this is what was required to catalyze the industry. This wouldn't have happened otherwise. And at the end of the day, if we can get out of the world where we're just subsidizing players that don't have the capability, and we're actually creating win-win situations where, you actually are riding on the fundamental rails of a capitalist framework, just in sort of an interesting twist. I think that works. I think that works a whole lot better than what we've done in the past. I mean, just step back and look at, what is the definition of stupidity? Doing the same thing, over and over again and hoping for a different result.
Right.
We have had, scaled players like an Intel, like an MP Materials in these various pieces. And what has happened, is the policies of the past have not worked. And so we are, pretty bullish on, and I can only really speak for our deal, but we're very bullish on our type of deal being a thoughtful approach to areas where there needs to be a change in the paradigm.
Yeah. Well, I really look forward to seeing how you guys grow and develop, and how this all develops as an industry in the U.S. One of the other storylines, which is I found really interesting too, related to MP Materials, was a deal with Apple.
Yep.
I think it was a recycling deal, which I found I think great. I think Apple's been doing some recycling of iPhones for a while now.
Yes.
What is the deal that you have with them? Why now for Apple, do you think?
Yeah, I think the why now in a lot of ways is a bit of a coincidence, but it's also, again, consumers of permanent magnets. And, I think for us, the thing that was so exciting to see is I don't think there's any more sophisticated consumer of rare earth permanent magnets out there than Apple, just given how pervasive their devices are, how scaled their global manufacturing footprint is, and the fact that, in an iPad or an iPhone, you've got tens and tens and tens of different types of magnets in there powering the functionalities that are so core to their competitive advantage versus some of the other consumer electronics out there. It was great to see the recognition from them of the need for a domestic supply of these materials. But the reality behind this Apple relationship is we'd been quietly working behind the scenes with Apple on recycling technologies, recycling of rare earth permanent magnets for 5 years. It was actually one of the first things I worked on, again, when I was at JHL, from a board observer perspective, sort of the initial conversation with Apple. I remember like, wow, this is pretty cool. We were a pretty small company at the time, really talking to them about how we could bring a capability to bear. And that's obviously borne a lot of fruit. We've built up, a capability that we think is really interesting and competitive and necessary. And I think we have said this in the past, and I think people sort of, didn't take it so seriously because we've been viewed as a mining company. And the reality is we are just a rare earth solutions provider. If I can provide a rare earth permanent magnet from recycled material and take what is currently marked at roughly 30-year mine life of my asset, but if I can take that and extend that another 5-10 years because I'm doing end of life recycling or post-consumer, post-industrial recycling, like, amen. That is value accretive to us as a business hugely. And so what this deal enables with Apple is, it created immediate scale in recycling in a way that we wouldn't have necessarily seen otherwise with a bunch of smaller customers, to allow us, again, to have that positive market signal, to invest in a scaled recycling capability. And, for us, having them as a recycling customer and as a foundational magnetics customer is so perfect because it speaks to also what the benefits are of vertical integration and why you need a scaled, vertically integrated player as the backbone of this industry. There are so many things that we can see as a raw materials provider into magnetics that inform how we design magnets, how we consume those raw materials, the formulations we use, that if we were just sort of a merchant provider of magnets, buying the market spec of whatever raw materials there are out there, recycled or not, we wouldn't see these areas of potential innovation. And I mean, think about Apple. There's, no more innovative company than them in a lot of respects. I think they see that capability too. And so, I think one thing that's not been hugely appreciated about this relationship with Apple is it's not, we recycle stuff, we make magnets, and it's a real continued technical collaboration. It'll be probably behind the scenes for a while, the same way that our initial engagement with them is behind the scenes. But, 5 years from now, we may come out and say, hey guys, we've got a totally different way to do X, Y, or Z, production process for magnets, and it's unlocked, a new cost profile, or it's unlocked a new capability. And that is one of the things that's most exciting for me about this engagement with them.
Oh, that's fantastic. Well, great. Thank you for that. Looking out 10 years from now, and you've probably hinted at some of this already, or already touched on some of this already. What does success for MP Materials look like? What does success for America look like 10, 20 years from now?
I think it's pretty simple. I think given the opportunity that's been afforded to us from, the hard work of our team over the last 7 years, the path to success is as clear as it's ever been. It's executing on what we have promised the Department of Defense, what we have promised American industry, what we have promised our shareholders that we will execute on, which is scaling up our production capacity at Mountain Pass, bringing to bear 10,000 tons of magnet capacity. The path is very clear. And so we are heads down focused on execution to get that done. I mean, we are, after the announcement of these deals, we took maybe a day or two to sit back and recognize like, wow, a lot of this is what we had been hoping for many, many years and had been working towards. And then we immediately got back to business of, okay, where are we putting this site? What exactly is the equipment list? We got to engage with our long lead vendors. So we are in pure execution mode right now in bringing this capability set to bear in the United States. And so, you fast forward, that's not going to take 10 years. We'll get there a lot quicker than that. But I think that's going to be the major proof point of success for us, is executing on those things. And again, I think maybe the next 5 years after this first, 3, 4, 5 years of execution is proving out our fundamental belief in that positive flywheel that allows the industry to grow. And, I think we'll be many multiples of the size that we are today with that opportunity set.
And perhaps related to that, but maybe a slightly broader question is, long term, what trends do you see playing out over the next, call it year to a decade? It could be about rare earths. It could be about economic policy. It could be about anything that you're interested in.
One of the items that I touched on a minute ago about our belief in why vertical integration can be a benefit for us, I think that is going to be a much broader theme in the market, particularly for industries like ours, where the upstream is so critical to the end product. I'll give you an example. Elon Musk on his earnings call a couple of quarters ago, talking about Optimus and all the progress they're making in Optimus. But lo and behold, we couldn't scale this quarter because we didn't have access to permanent magnets. Like, given the enabling aspect of the upstream for these critical downstream industries, particularly in the era of physical AI that we're entering right now, I think vertical integration is going to be something that you see a lot of. I mean, we talk to A&D companies that, are, sort of typical OEM style, where they are the assemblers and their tiered suppliers are the ones that make all the parts. I think this scare in April has caused not just a rethink of how do I situate my supply chain to be secure, but does it make sense that I outsource, this critical piece of technology, and then I got to wait in line when I can't get actuators and everyone else is trying to get actuators? Like, think about it from a systems level. How do you enable cost competitiveness? How do you enable, new feature sets, things like that? I think in the era of physical AI, where motion is so critical to all of these things, I think you'll start to see vertical integration as a theme that will enable, all of those, positive aspects that I talked about.
Interesting. All right, you ready for a little bit of silliness with trend or fad?
Absolutely.
All
Let's
right.
do it.
I'll get your quick take on some of these things. SPACs, trend or fad?
I think I'm going to give you an annoying answer, which I think the trend will be that they will come in fits and starts. They will be fads and then disappear again. I think the issue is that fundamentally, I think the SPAC framework can work. I think MP is a great example of that. I think the problem is often the incentives get misaligned so that companies that are not ready to be public, that maybe shouldn't exist to begin with, find a way to find a sponsor where the incentives are misaligned and they end up getting public anyway. We see that in our space. And so it's actually one of the fundamental things that we changed in our de-SPAC process was our SPAC sponsor had the entirety of the promote based on whether we achieved an outcome for the public shareholders. So they didn't get a dime if the stock didn't perform over a long period of time. And so that, I think, aligned the incentives. And so, products that will create misaligned incentives are going to be here forever. whether that's in SPACs or in something else.
Yeah. Space tourism, trend or fad?
Oh, that's hard to say. I think given, the economics of space, I think when you get scale, I think it starts to work a lot better. So I would say that's a trend over time. I mean, it's, same laws of economics as anything else.
Americans drinking less, trend or fad?
Oh, definitely a trend. I think I think there's realization of the health impacts there that haven't been brought to the forefront before. So I think for sure a trend.
I wonder if they're not doing something else though.
Yeah, I mean, people will always find their vices. So maybe it won't be drinking; it'll be something else.
And then finally, lab-grown diamonds, trend or fad?
Oh, I think it's a little bit of a fad, actually. I think the value in diamonds is not just how they look, it's the scarcity impact, and you see that with everything.
Yeah. Awesome. Ryan, thank you very much. Thanks for your insights. What's the best way for people to learn more about you or MP Materials?
Go on our website, follow us on X. We post a lot there, and there's a lot of information. And certainly, from an investor perspective, we've got a great team on the IR side that are happy to talk to investors at any time. So check us out on our website.
Fantastic. Thanks again, Ryan.
Thank you.
And thank you for tuning in to another episode of Trends with Benefits.